Live from Brussels, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. A fragile ceasefire holds, Project Freedom is on pause, and Trump says there's a great progress towards a final agreement with Iran. Brent says $108 a barrel. The AI rally storms on. AMD shares soar in extended trading after delivering a blockbuster sales forecast, while Samsung breaks $1 trillion in market cap. Plus, a busy earnings day here in Europe. Novo Nordisk reports this hour. We hear from the C-suite, Hensoldt, Equinor, and Infineon all this hour. Good morning, good morning. Let's get a check-in on the markets this morning as we head into again, another confusing day for potentially the situation in Iran. However, not a confusing day when you're trading stocks here in Asia. You can see that face-ripping rally over in the MSCI Asia Pacific. Japan closed today up almost 3% today. Really the heavy lifting coming from the tech sector. We see Samsung, for example, getting a bid of about 16% this morning. That is going to continue on into Europe at the Euro Stoxx 50, getting about 1 percentage point higher this morning. And S&P futures closed at a record yesterday, will open higher this morning, about 0.3%. When we switch up the board and look at these sort of further commodity complex, Brent this morning going a little bit lower, down almost 2%, almost $2 down to 108 for Brent crude. That is after some sort of optimistic signals to the market from the President of the United States, potentially wanting to wind down the war. We'll see what we get a little bit later today. Similar story on the dollar index, down by about 0.5 percentage point. And of course, gold now up 2%, up to $4,651 a troy ounce. Let's get to the risk events that we're watching throughout the day today. We've got G7 trade ministers meeting in Paris after a meeting between the EU and Jameson Greer yesterday. We'll get France industrial production a little bit later this morning, and later again, earnings out of the United States, ARM, Disney, Uber, all on the docket. And we're getting some breaking news this morning from Lufthansa, the biggest airline in Europe this morning. They are announcing a loss of 612 million euros. The expectation was for 150 million, so slightly better than had been anticipated. You look at free cash flow at about 1.38 billion euros. That's up 65% year on year. And looking also to the sort of all-important outlook for Lufthansa, maintaining their 2026 outlook, something that'll be very difficult, I suspect, to forecast just given everything we've been seeing out of the price of jet fuel and, of course, the Strait of Hormuz, which is where we're going next. President Trump says he is pausing the U.S.-led effort to help stranded ships exit the Strait of Hormuz to see if an agreement can be reached with Iran to end the war. Oil is softer following his announcement, which came a few hours after the U.S. said offensive operations against Iran are over.
We have a situation where we have total control. As you know, the blockade's been amazing. It's like a piece of steel. Nobody's going to challenge the blockade.
They don't control the strait. I mean, we know Iran is embarrassed by the fact that our blockade is holding, and we can run ships through, and we're going to help the world run ships through.
Operation Epic Fury is concluded. We achieved the objectives of that operation.
For more, let's bring in Bloomberg Horizons anchor Jumana Brzezinski. Jumana, thanks again for joining us to try to bring some clarity in what is a very unclear situation. It seems clear, though, that the United States is trying to find an avenue to bring down the escalation and to end this war. Do you think that the odds of that are increasing? What is the market saying? What is the region saying?
Yeah, absolutely, Oliver. And I think that's exactly the messaging, the narrative that has emerged overnight coming through from the White House. There's a clear intention here to perhaps reinvigorate the path towards diplomatic discussions. And they certainly had a pretext to once again resume hostilities after that very eventful Monday, when, of course, Iran launched a series of attacks towards the UAE. But notable yesterday, the General Kane saying that the threshold for war was not met by the events. He didn't specifically cite Monday, but he said the events that have happened since the ceasefire was implemented about a month ago. So that in itself was quite notable. And then you just played a little bit of Secretary of State Marco Rubio's comments, where he said they've essentially achieved the Operation Epic Fury objectives, which is questionable given that there has been no resolution on the nuclear file. But he did suggest that once they proceed to the next phase, i.e., talks around a diplomatic solution to this conflict, they would be addressing the framework around what Iran is willing to make concessions on around the nuclear file. And then he said a big priority is the reopening of the Strait for things to return back to where it was. And of course, a couple of hours later, Trump then put up that Truth Social post announcing that Project Freedom, which was their plan to help guide vessels through the Strait of Hormuz, was being paused temporarily to give these negotiations a chance. Now, the Iranian side, once again, are not committing to anything. The president, Masoud Pezeshkian, is saying that they will not surrender, that the U.S. demands have been very maximalist. At the same time, we know that the Iranian Foreign Minister Abbas Araghchi is in Beijing now, so meeting with his counterpart there. And so you have to assume there are going to be multiple countries, including, of course, the main mediator, Pakistan, who will be pushing on and firing on all cylinders to help bring the two sides together to at least bridge some of the daylight between the respective demands that the U.S. are pushing forward versus what Iran is contesting. But it is still early days. At least the language, though, from the U.S. suggests that they want to move forward on the diplomatic side of things as opposed to a full resumption of the war.
And so there you have the status of the political discussions, the diplomatic discussions. Where does that leave the reality of the Strait of Hormuz?
Well, both sides are asserting that they have full control of the Strait of Hormuz. There you heard the Defense Secretary Pete Hegseth say that the U.S., their blockade is going to stay in place. And this is also notable as well. When President Trump announced that they were pausing Operation Freedom, he also reiterated that their blockade of Iranian ports was going to stay in place, that it was successful. But remember, it was a week ago where President Trump also alleged that within a couple of days, the Iranian pipelines were going to start exploding. That has not happened, clearly. And the estimates that have been put out there from data analytics firms suggest that Iran's storage capacity would be full by 10 days, 12 days. Remains to be seen whether that's actually going to happen, given a significant chunk of their Iranian oil. Their oil actually goes for domestic consumption, and they have not given any signs yet that they're willing to yield or concede. And in fact, overnight have announced that they want to establish a new protocol around any vessels that pass through the Strait of Hormuz. So it is still effectively an impasse there. And let me just tell you, Oliver, 0 commercial vessels passed through the Strait yesterday, according to our Bloomberg reporting.
Well, thanks very much, Jumana, for the latest there, keeping on top of things so that we can stay abreast of what's going on. Jumana Bersetchi. Let's go now to the market action. We've seen stocks in Asia following Wall Street higher, absolutely face-ripping rallies. The almost 3% bid over the stock market there. A large part of that story is Samsung. Let's see how they're faring with Min Min Lo in Hong Kong.
Hey, Oliver. Yes, that's right. We are looking at Asia-Pacific stocks at a record once again after many of these markets come back from the holidays. South Korea on a tear. Look at that index there, up by 6.5%. TAIEX as well, yet another record high. Japan is still closed. We're looking at futures. They're also at a record, looking to join that rally. Hang Seng also seeing gains there after we have that Hong Kong GDP numbers much better than expected, weathering this war better than many people have expected. You take a look at what is driving that rally again. It is the tech stocks that are flying, just following through with what we saw in the US with the SOX index as well. You take a look at Samsung, 14% gain. SK Hynix as well, double digits there, and that really puts Samsung into this very exclusive club of the $1 trillion club when it comes to market cap. Only the second company in Asia to be part of that exclusive club, following TSMC. It is the 13th global company to be breaching above that $1 trillion market cap number. MediaTek also notable just because it has been flying, limit up 10% or so in the last 2 sessions, and yet today, a third day that we're seeing huge increase today. What else we're watching is currencies. You look at the yen today, there has been a dramatic plunge in dollar yen. Look at that move there, and it really has no apparent reason, and that smells of government intervention, especially after what we saw last week. Again, officials have been reluctant to confirm, but analysis of central bank records suggested that the government had sold, maybe used 5 trillion yen to prop up the yen, and today, once again, perhaps another sign of intervention again. And so for traders who doubted the credibility of the central bank and the Ministry of Finance in Japan, they may have to really catch up on entering a hedging strategy for a stronger yen.
Well, Min Min Lo in Hong Kong, thank you very much for your time this morning. Hopes of a ceasefire have pushed the S&P 500 to yet another record high, of course being followed also by Asia. Let's bring in Bloomberg MLive strategist Mark Cranfield, trying to parse the sort of activity that we're seeing in the market today. Mark, how much of this is optimism over the fact that the war might end? How much of it is AI exuberance? And as a consequence, how fragile is it if you see a sort of reversal in either of these two trends?
There's a lot to do with the AI story, but it's also investors recognizing the fact that particularly big US companies are managing to make very serious profits, even though there was a war going on in the background. So we are seeing the earnings season in America is delivering extremely good numbers on the whole, and investors can see that for the time being at least, the closing of the Hormuz and other factors related to the war is not affecting the money that investors are making. So they feel they can stay with the US rally. But really on a global picture, the US rally is really relatively small compared to the big story which is going on. What Min Min was talking about there, if you look at year-to-date performance, it's all about Korea, Taiwan, Japan. That's where global investors have been putting their money to get the excess returns, not the United States. S&P keeps making record highs, but it's only up 6% year-to-date. In fact, there's already rotation going on to smaller and medium-sized companies in the United States. So although the headlines look great, S&P will probably continue to grind higher. The big story in global investing in terms of equities is happening outside of the United States, particularly in Asia, and particularly for those companies like Samsung and TSMC, which are now trillion-dollar companies, challenging the very people like the Mag 7 stocks who for so long have dominated global investing. So the picture is changing and investors are moving more to the Far East.
Well, Mark Cranfield, Bloomberg MLive strategist, thanks so much for that. And we're going to stay on top of all of the tech developments. AMD's stock soars more than 16% after a punchy sales forecast boosted by data center spending. We'll bring you more details on that. But first, German defense company Hensoldt reporting a record order intake and backlog, revenue up 25%. We'll be speaking to the CEO next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. I want to get to some earnings stories now. The German defense contractor Hensoldt has reported record order intake, rising profitability in the first quarter results. The earnings come amid heightened global geopolitical tensions, obviously a number of wars, and the U.S. now saying that they will withdraw a number of their troops from Germany. Joining now is the CEO of Hensoldt, Oliver Dörre. Oliver, thank you so much for joining us. So much to talk about. I'd like to just get to your numbers this quarter. It seems, again, another bullish quarter for Hensoldt. I'd like to get an idea of kind of the overview of this quarter and what influence, if any, the war in Iran has had on your projections and the numbers in this quarter.
Well, first of all, thanks for having me, Oliver. So indeed, a very strong start into the year. So we almost doubled year on year as far as our order intake, 1.5 billion. We see that now revenues are also moving in with 25% growth year on year, and we do that profitable. So also profitability year on year, 50% up. So indeed, very strong results. So we see that the momentum that we have built up last year is continuing. So we see a structural demand shift in Germany, especially earlier this year, a lot of order intake on vehicle programs where the quantities are going up, but it's both quantities and quality where the structural demand is changing, and Hensoldt is very well prepared. We have a high industrial capacity. The deliberate investments into industrial capacity pay off, but also our investments into technology with MDO Core, system of systems, and that is what Iran has proved, that it's not only the traditional systems in air warfare that matter, it's also information superiority, connecting the things together, connecting the dots. That's where Hensoldt is positioned.
And of course, that is the core of your business. And of course, sensors and radar, all of these things that are absolutely essential for early detection of, for example, drone attacks that we've seen across the Gulf. So I'd like to get a sort of clear idea of demand. Has you seen that increase from some of the Gulf countries surrounding the area? Has there been a material impact yet in terms of demand because of the war in Iran?
Yeah, for quite a long time, we saw this discussion, be it tanks or drones. So I think the Iran war showed very well a difference also to the Ukraine scenario, where we have traditional air systems, be it in air power, in air attack, long range, EW, but also in air defense. And that strengthens our idea that we have integrated into our North Star strategy, that actually we need both. We need the traditional systems in high volumes, but also we need a new quality of interconnection between the system, leveraging on the data from the sensors. And that is definitely where the discussions we had with our customers on interconnecting heterogeneous systems in the landscapes, building quickly, because software scales much faster than hardware. In that regards, the whole discussion after the Iran war ramped up, and that's what we see in the results in Q1.
And I'd like to get your perspective on the big news we had over the weekend, which is Donald Trump will be pulling 5,000 American servicemen and women from Germany over the next 6 to 12 months. That number might increase. Does that change the defense picture in your mind for Germany?
Well, I think it doesn't change the picture. However, the pressure on Europe, on Germany, increases with those decisions. So we had a long time that in the peace dividend we relied on the protection from our US allies. And personally, I'm a very strong supporter of a transatlantic relation. And in that regards, I hope that over time the whole situation will stabilize again. But anyway, for Germany, the wake-up call that we had received 2 years ago at the Munich Security Conference with J.D. Vance saying that Europe has to take responsibility, that is obviously now being emphasized and amplified, so that the investments that we clearly see in Germany will be sustained over years.
And thinking about the German spending, again, this is, as you say, you know, at least a 10-year sort of project. And over that 10-year period of time, the kinds of things that the German government will require will evolve. How are you evolving what you produce, what the sort of things you're looking to develop? How is that changing to capture that evolving demand?
Well, first of all, just 2 days ago, we had our finance minister introducing the draft of the cornerstones for the budget from 2027 to 2030. And we see now the first time that even next year, the defense budget is supposed to be increased by 13 billion, so that already 2027 we will go beyond 100 billion. So now we have the first time a figure for 2030, where it shows that the pure defense budget will go into 180 billion. So that is exceeding 4% of the GDP. So I think my thesis that I have outlined a couple of times, that this increase, that this investment is structural, long-term, is with that confirmed. So what are we doing? We continue our investments, of course, into industrial capacity. So, I mean, looking at our TRML-4D radar, and Iran clearly showed that air defense is key for all armies across the world, but also in Europe and Germany. So I think by the end of the year, we have scaled our industrial capacity for the TRML-4D by 10. That's excessive and will bring us into the position to deliver the quantities that is required. And we do this across the board, across all portfolio. The second thing is last year we spent 140 million self-funded R&D, which is almost shadowed with the same amount of customer-funded R&D, which goes into smart and connected sensors. So our sensors have to be part of a system of systems. We decouple the sensors more from the platforms, because we have to understand the nature, also looking at sensor-to-shooter chains. We have to understand the nature of those sensors as a capability on the battlefield. And we invest into the software, MDO Core, the software stack that will glue all the dots together to bring a leapfrog capability to our warfighters.
Well, Oliver Dörre, this Chief Executive Officer of Hensoldt, joining us this morning from Munich. Thank you so much for your time on, again, what is, by any sort of normal measure of a company earnings, pretty impressive numbers. We'll see what the market makes of it a little bit later this morning. But coming up, Nvidia's biggest rival, AMD, soars in late trading after data center spending boosts its sales forecast. We'll have more on that next, and this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. AMD shares soared more than 11% in late trade after a flood of data center spending boosted its sales forecast. The leading challenger to Nvidia said second quarter revenue will be around $11.2 billion. That was a beat over the estimates. For more, let's bring in Neil Campling, Bloomberg's senior strategist here. Hyperscaler spending finally feeding through to AMD. What stood out to you in the earnings for the company? What does it tell us about the broader ecosystem?
Yeah, so I think the key message from AMD last night was they see the total addressable market, the TAM, for servers of $120 billion by 2030, a massive uplift in the guidance. Their guidance for the following next quarter is for server growth to grow by 70% year on year, some big numbers. Now, the stock's huge run after hours comes after the best month the stock has had, up 74% in April, the biggest monthly move since 2001. So, as people mentioned yesterday into the print, the stock was priced for perfection, and fortunately, AMD gave them perfection. It was a massive beat and raise in terms of quarter, the guidance, hyperscaler coming through in terms of the growth rate, and AMD is now trading on 44 times forward price earnings estimates, which is nearly double the multiple of Nvidia. And people are talking, investors talking this morning about AMD's numbers, proving that they are a sort of real alternative to the Nvidia ecosystem by AMD offering those hyperscaler chipsets to their customers. Pretty phenomenal numbers.
And Neil, talking about real alternatives, we now have an Anthropic model that can handle financial services. What alternatives is that model going to provide, just very quickly?
I think what we're seeing here is now a full suite of products that are also incorporating third-party apps. So we saw the tool set last night incorporating things like Excel and Word, can create PowerPoint presentations for clients from scratch. Within seconds can basically produce sort of some of the financial service modeling that's required. So it could be a big step change in terms of where people are valuing some of these software stocks that could be victims of the huge success Anthropic could face.
Yeah. Well, Bloomberg senior strategist Neil Campling, thank you so much for keeping us on top of all of this action this morning, both in the markets and, of course, all of the things that are being released by these companies. I'd like to bring you some numbers now from Leonardo, the Italian defense giant. The headline here is confirming its 2026 guidance, still sees a full-year free operation cash flow at about 1.1 billion euros. We should say that this is a company that has had its CEO replaced very recently after there was some conflict between the former CEO and the Prime Minister of Italy, which, of course, the government has a stake in the company. So watching a little bit further on the guidance that we might get from the new CEO. Coming up, the Norwegian energy company Equinor, absolute giant, reports better than expected first quarter operating income after tax. We'll be speaking to the chief financial officer next. And this is Bloomberg. Live from Brussels, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. A fragile ceasefire holds, Project Freedom is on pause, and Trump says there's great progress towards a final deal with Iran. Brent says $108 a barrel. The AI rally storms on. AMD shares soared in extended trading after delivering blockbuster sales forecasts, while Samsung breaks a $1 trillion market cap. Plus, a busy day for earnings across Europe. Novo Nordisk going to cross any moment now, and we'll have a hear from the C-suite. We just heard from Hensoldt. We'll be hearing from Equinor and Infineon very shortly. Checking in on the markets this morning, a huge amount of activity throughout the markets, U.S., Europe, Asia. Equity markets bid this morning. You can see there, Asia Pacific ex-Japan. Japan is closed today, up about 3%. A big part of that story is Samsung, up about 15% this morning. Absolutely breathtaking rally there for the Korean giant. The Euro Stoxx 50, they're up about 1 percentage point, so that rally moving a bit here into Europe. And the S&P closed at a record yesterday, opens up today, so we're extending that rally across the markets. When we look at the oil market, we look at the broader different markets from currencies to commodities. Oil is being sold off slightly this morning, down by about $1.30 on Brent, keeping us at about $108 a barrel. We should say that's still pretty much at the higher end of the range since the war began in Iran, despite some of the optimism we're hearing this morning. U.S. dollar being sold off this morning, down about 0.5%, and gold up 2% this morning at $446.47 this morning. Let's get to some of the earnings that we've got now crossing the terminal. BMW, the automotive giant out of Germany, very critically here, we're looking at their operating margin coming in at about 5%. The estimate was for 5.16%. So just in the scheme of things and how difficult a moment this has been for the automotive industry, I think the market potentially will be satisfied with that there wasn't a massive miss over on the margin. In terms of EBIT, coming in at $2 billion, the estimate for 2.2, so a miss there. Automotive revenue at 26 billion euros, the estimate, at 27, the estimate for 26, so a slight beat there. And going to Novo Nordisk, this of course the formerly largest company in Europe, but of course has had a sort of difficult year over the last sort of 2 years. It's lost about 70% of its value. There's real questions about whether it can gain back some confidence from investors. They're seeing their adjusted sales at CER down 4% to down to 12%. Previously, it saw down 5% to 13%. So again, narrowing that range just a little bit, but looking to rapidly adopt the new Wegovy pill, which of course would be potentially a catalyst to try to bring some new sales there for Novo Nordisk. We should also speak about Equinor, which has reported profit ahead of expectations in the first quarter, lifted by higher oil and gas prices. The Norwegian energy giant will start a second tranche of its 2026 share buyback program of as much as $375 million. For more, we're joined now by the Chief Financial Officer, Torgrim Reitan. Thank you so much for joining us this morning. I'd love to get your perspective on what we have seen, obviously, for Equinor this quarter. Overlay for us your results with what we've seen in absolutely spectacular oil and gas markets over the last couple of months.
Good morning, Oliver. So, in times like this, Equinor, we have a very important role to play, and that is to provide Europe and the world with reliable energy and as much as possible. So, therefore, it's very, very good to report record production this quarter. So production is up some 9% based on new fields coming on stream and wells and excellent operations, across the board. So very glad to report that. And also we are able to capturing sort of high prices and the volatility through our trading operation. And that sort of leads to adjusted earnings of close to $10 billion this quarter. So, of course, the situation that we operate in is a very unstable and fragile one. And clearly, the situation around the Hormuz is concerning and very serious. And we do hope that sort of it comes to some sort of solution, because this is not good for economic growth in the world and for the long term for anyone as such. But in midst of this, we have to concentrate on what we can control, and that is to operate safely. It is to maximize our production and get it to the markets where the energy is needed the most. And after the war in Ukraine and sort of Russian gas not longer in Europe, we are the largest energy provider to Europe, and that is something that we take very, very seriously.
And I'd like to dig into that a little bit because, of course, the strategic role of Norway has always been important now, potentially more than ever in terms of the oil and gas production. I'd like to see, after what we saw in the war in Iran, the Strait of Hormuz, does that change your assumptions about, for example, exploring more oil and gas in Norway? Is that a sort of imperative now for more strategic autonomy here for Europe and their own oil and gas?
Even more important, but this has been of high attention for decades. And, you know, the Norwegian continental shelf is a mature basin, but we have been able to keep it producing on a very high level for decades, and we are going to maintain the same level all the way to 2035, and we keep exploring. So we had 7 discoveries in the last quarter, some gas, some oil, and many of these we will put in production quickly and bring it to market. So I mean, production close to market from stable regions clearly has an even more important role to play in the energy mix going forward. And clearly, you know, we are very large in Norway, but clearly we have a lot of products, production internationally as well, mostly located in sort of stable and regimes and all of that. So we are a company that clearly see the role of being a reliable producer, you know, very, very important in these days.
Can you put a timeline on what quickly means in terms of getting yield from these oil and gas fields you've discovered?
Yeah, you know, we are, you know, by far the largest operator on the Norwegian continental shelf, operating some 80 assets, meaning that we have a big set of infrastructures and fields that we operate and can look together on a portfolio level and take out synergies. So when we have a new discovery, we can tie it back to existing platforms and into pipelines very quickly. And a good example is one asset from last autumn, where it took us 3 months from actually we made a discovery until we put it in production. You cannot do that without operating the totality as such. And the big improvements we are currently running in the company is to take down the time from exploration to production by 50%. And that is doable, and it will be very much needed going forward to really boost energy production out of Norway.
Yeah. And we've seen the sort of range for Brent this year being about $60 a barrel up to $125 a barrel. What assumptions can you make about the oil market going into the end of the year? What kind of projections are you making? What are you assuming on the price of Brent?
So that's a very difficult question, Oliver. You know, what we need to do is to see to that we are very robust in a low price environment, and we are. So we need around a $50 oil to sort of, you know, cover everything that we do. We assumed $65 coming into this year, and then $9 on gas in Europe. Clearly, that is different now. So if we assume 85 for the average of the year, which implies sort of a quick solution to Hormuz, our earnings or cash flow will increase by $8 billion for this year. Then, you know, it can go much higher. It can go lower as well. And we must not forget that sort of underneath all of this, there was an oversupply situation as such. So our job is to remain resilient for low prices and capture value and trading profits in a high price and volatile environment. I won't dare to have a specific price view for the year. We just need to be prepared for a lot of volatility.
I think that's fair, but if anybody's going to know or have a better assessment, it will be you. Torgrim Reitan, thank you so much, as Chief Financial Officer of Equinor this morning as they give their results. I'd like to get to some more earnings this morning. Infineon raising their full-year revenue forecast, seeing a significant increase. We should say, pulling up Infineon, they're up almost 50% over the last 3 months. This is the best performing stocks on the Euro Stoxx 50, and we had a conversation a little earlier with the CFO, with Guy Johnson. Have a listen.
if you look at the current fiscal year, there is very clearly the supply is limiting the revenue, and that's one of the reasons why. And it's a great timing, because you may be aware that we will be opening our next module in July in Dresden. This is exactly the additional capacity we need to bring more AI and also related capacity to the customers. So this will eventually over time fade out. So currently we are in an allocation phase, very clearly, but the more capacity we build, the more capacity the industry builds, the better the situation will be. Now, to your pricing question, indeed, as we said last time already in the earnings call, on the back of this super strong demand and on the supply-demand situation, there is a possibility, and we have used them and advised our customers that we will raise prices in AI and adjacent areas from the 1st of April onwards. So there is a positive trend which we believe will continue at least during this fiscal year.
Do you see any issues currently coming out of the Gulf relating to things like helium supply? Are you in any way being impacted by what is happening here? I'm hearing a lot of chat in the industry about concerns around this, but I'm wondering if they're real yet.
Yeah, so there are, I think, very, very different perspectives on that, depending on how an industry is affected. For us, yes, we need helium. Yes, we need the transportation of our products also through this area. But as of now, we do not see any material supply issues. And why is that the case? It's because of the multi-sourcing strategy we have. Helium and other goods we need in order to produce our chips are sourced not only from that region. What we clearly see is price increases for helium, price increases for gold, for copper, for other commodities, for freight and logistic costs, but that is baked into our revised guidance.
Okay, you mentioned a moment ago the Dresden fab that you're going to be bringing online. I think it's the 2nd of July that is going to start. Is the ramp up on track? Can you give us any guidance? Is everything working okay? Is that looking good?
Yeah, no, it's all is working very well. So if I compare to the original timeline we had, we are at least in time and in budget. We are pulling in as much as we can, and therefore we bring it into the 2nd of July. And if you may recall, last quarter we announced that we are even pulling in 500 million additional capex, which originally was planned to be spent next year. We pull it into this year to Dresden mostly in order to fulfill this super cycle and to generate even more revenues, profitable revenues.
Sven, you say super cycle. Is this industry still cyclical? Is the chips industry still cyclical? Is this time different? Is there something about this cycle that is different?
I mean, I would not go so far, even on the back of a very strong growth now from AI, to say this industry now, once of a sudden, left the zone of being a cycle industry. I would not go that far. But I think it's up to the managers of the companies to also make a call on how much you want to diversify your business. And we are diversifying our business to the extent that, yes, indeed, we want to capture this mega growth on AI, but we continue to capture also growth in other areas, industrial, automotive, microcontrollers. So therefore, the broader you are, the more resilient you are, and the less dependent you are on individual cycles. But the AI cycle clearly is a big exception, and it's great not only for the capacity, not only for the revenue and the profitability, it's also very visible in our stock price.
They're the Chief Financial Officer of Infineon, Sven Schneider, speaking with Guy Johnson. We should say that's a stock that's done incredibly well over the last 3 months, up about 50%. And another stock that may be doing very well this morning is Novo Nordisk, because coming up, a monster beat. Novo Nordisk reports better than expected first quarter net income lifted by Wegovy pill sales in the United States. The expectation was for a margin of 42.6%. It came in at 61.6%. We'll get more on that next. And this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Novo Nordisk reports better than expected first quarter income lifted by its Wegovy pill sales in the United States. The Danish company has raised this year's guidance for both adjusted sales and operating profit. We should say that the operating margins came in at about 62%. The estimate was for 43%. For more, let's bring in Bloomberg's Copenhagen reporter Zana Vaz. Zana, is this going to be enough to revive the fortunes for Novo Nordisk, once the biggest company in Europe?
I mean, for now, it was enough for Novo to slightly raise its guidance for the full year of 2026. Certainly, the market had been waiting to see the results of the launch of this Wegovy pill, which Novo launched in the US in January. And now we're finally seeing kind of the results of that rollout in the earnings. Novo, again, slightly raised its guidance, but it's still expecting revenues and profit to decline for the year. So certainly, there's still a long way to go for Novo to kind of earn back that trust that it's lost among investors in the last year and a half.
And how much of a threat is this to the sort of Danish economy? I mean, it's something that you've covered throughout the last few months and years, and this is something that obviously, when it was at its very height, was a very high concern. Is there a sort of silver lining to it being not quite as important? So how is the government thinking about this? How is the economy reliant on Novo Nordisk at this point in time?
I mean, that's certainly a question that we've been reporting on a lot here from our Copenhagen bureau, and certainly also I'm certain that economists here in the country are closely monitoring Novo Nordisk's fortunes today and earnings today. I'm certain also that it will be good news that they're raising their guidance slightly. Novo does have a massive impact in Denmark on jobs, on GDP, on investments. But there is also the general sentiment that Novo, even though earnings or revenue is expected to decline this year, it is still making a lot of money, and it's still creating a lot of jobs. So there's still optimism here in Denmark.
You know, it's funny, being a sort of a Danish economy reporter, you also need to be a specialist on pharmaceutical competition in the United States. How difficult is it going to be for them to get a foothold against Eli Lilly? How intense is that competition?
It's very intense, and it is going to be very difficult. But Novo is optimistic that it can claw back some of that market share that it's lost to Eli Lilly, and it is betting on the Wegovy pill. So certainly, it's encouraging, probably for them, that the launch has gone well. And they're also betting that by lowering the prices, part of this competition with Eli Lilly, they will also be able to reach more patients, because more affordable medicine means more people can buy it. But the big question is, when are we going to start to see those volumes pick up enough to make up for those lower price levels? So there's certainly a lot of outstanding questions, and we're going to be looking forward to hearing CEO Mike Duster answer those on media calls and analyst calls today.
That's right. Well, thank you so much to Bloomberg's Copenhagen reporter Zana Vaz, joining us from Copenhagen this morning. And we'll be speaking to the CEO of Novo Nordisk, Mike Duster. That is going to be on the pulse at 9:20 London time, 10:20 here on the continent. Now, let's get to some other stories that we're following this morning. French President Emmanuel Macron has nominated one of his closest advisors as the next governor of the Banque de France. Emmanuel Moulin was the president's chief of staff and previously served as a treasury chief. If approved, he'll succeed François Villeroy de Galhau, who's retiring early at the end of this month. Plus, Romania's government has collapsed after losing a no-confidence vote, triggering talks over a new cabinet to safeguard efforts to rein in the EU's widest budget deficit. President Nicu Jordan will hold informal talks with parties to test the mood and assess potential options for a new government, which he pledged will be instated in, quote, the reasonable timeframe. They're also waiting for money from the EU that will expire in August, so absolutely critical to get a government in order very quickly. And Germany's Friedrich Merz, the chancellor, says he will not form a minority government as his coalition faces a deepening crisis. The chancellor says handing power to a weaker administration would risk benefiting radical forces, referring to the far-right AfD, which is leading in polls in Germany. Merz also ruled out new elections, warning a prolonged campaign would hinder Germany's ability to respond to economic challenges. Plenty more coming up. This is Bloomberg.
The United States is short power, we're short compute, we're short chips, and there are going to be shortages in all three. And memory, four things. I actually believe a new asset class will be buying futures of compute. We just don't have enough compute power right now.
They're the words of BlackRock CEO Larry Fink speaking at the Milken Global Conference, saying that the United States is short on power, short on compute, short on chips. That means that this market is long on the tech industry, and that is exactly what we're seeing this morning, illustrated perhaps no better than by what we've seen happening in Samsung this morning, crossing over that $1 trillion market valuation for the first time, joining one of very few companies outside of the United States to have ever done so. An absolutely spectacular rally for Samsung today, up at one point, up more than 16%, now settling well over $1 trillion. So something we're watching very carefully. And speaking to Mark Cranfield a little bit earlier, interesting now that the global market is looking away from the Mag 7, looking for diversity in some other countries like Korea. And of course, you're seeing Samsung benefiting. Brent, on the other hand, down a little bit this morning at about $108 a barrel. That is after what we've been hearing, again, very conflicting information from the Iranians, from the President of the United States, even conflicting information from within the administration. But again, the market is taking it as a slightly bullish signal in terms of the war potentially ending, and the Brent now falling this morning at 108. And of course, another thing we're watching very closely, we've had earnings from Rheinmetall yesterday, Hensoldt today, the European defense trade, something that has been outperforming the market for the better part of the last couple of years. That is really fading, really turning sideways. So maybe the defense industry now getting into a little bit more of a sort of stable situation as we get that defense spending rolled out over the next couple of years. We'll be discussing all that, Trump's threats as he raised tariffs on the European Union with the ambassador to the EU. That'll be within about an hour's time. This is Bloomberg.